This is the first back-to-back monthly decline since mid-2022.
We think deliveries and manufacturing there has been fantastic of late. And ultimately, we do believe in this robo-taxi news, and we think it'll be powerful.
I think he's actually going to be long-term less interested in making cars. Of course, Tesla's still going to do that, but I think he has different plans for the kind of company that he wants Tesla to be.
All that and more. So let's get to it.
This is the first back-to-back monthly decline since mid-2022. So we've actually had, for some time, we had a real sustained period of growth for the industry. I think what's maybe surprising looking into these numbers, one of the sort of trouble points the last few months have been battery electric vehicles. We actually had a relatively solid month, I'm happy to report, for September, where roughly 14% gain for the industry, which is pretty solid. But what we did see was just some weakness in the rest of the industry, and we've now just seen a sort of fairly consistent up and down nature to overall sales, to where we're now only up for the year 1% through the first 9 months of 2024.
Is it priced in? You got GM this week, you got Tesla this week, you got Mercedes this week. We've already had some pretty grim numbers coming out of other European autos. Are the US automakers in a different place than European automakers, or is this a global phenomenon?
I think maybe the global phenomenon for these international companies that is very consistent is the weakness in China. I think that's going to be very interesting to hear from GM later today. We've seen that consistently across the Germans. Even Tesla, I think, is maybe holding up better than some of these other companies, but isn't by any means sort of seeing the growth from China that they did in the past.
Just wait for it. These cheaper models coming from Tesla that might even be coming as soon as Q2 of 2025. Something tells me that narrative just might change.
The one we would try and avoid is Tesla here. It's just not looking so great. The stock dropped $20 after that reveal at Warner Brothers 10 days ago or so, whenever it was. Maybe sell some puts on Tesla at 220, so it seems to have support down in that range. But we like the others except for Tesla.
Quinn Tatro, the only one he really may like here is Tesla. So Quinn, why Tesla? Why now? Let's have a conversation. Make the answers short, and we can go back and forth a little bit.
Yeah, I'll say the first one, side valuation, is political risk. In the Mag 7, the only one, in our opinion, that has the upside potential with a Trump win is Tesla. Every other company, I think, would face significant challenges with the tariffs. Tesla and Elon on the campaign trail now, we don't feel that a Trump win is baked in here at all. And it is trading 40 times forward earnings, so I don't disagree with the rich valuation. But we also think that they are firing on all cylinders, no pun intended. We think deliveries and manufacturing there has been fantastic of late. And ultimately, we do believe in this robo-taxi news, and we think it'll be powerful.
I hate to tell you, folks, Tesla's going to benefit no matter who becomes president. The stock market may move quite violently in the after hours after the election, but that short-term noise, regardless in whatever direction it is, will be leveled out by the fundamentals. But I'll admit, a Trump victory could have TSLA riding a little bit higher than it should. A Harris win, on the other hand, the stock will dip. But I don't think it'll last as long as it would if a Trump victory were at hand. But I suppose time will tell. Regardless of the victor of the presidential election, Tesla, the company, will continue to fire on all cylinders, producing and delivering vehicles and being the leader in autonomous driving. These things won't change and is the reason why Tesla will be the most valuable company in a decade's time, no matter who the president is.
Got some fun names. This isn't like the juiciest week, but Tesla's always fun. And GM right next to it. They're very different companies, and they're very similar companies in some way. Let's talk Tesla first here. What's your expectation? What do you think of the chart?
Yeah, so interestingly enough, it's trading within this wedge pattern. And wedge patterns tell us that there's been a lot of price chop sideways, and it's kind of narrowing tighter and tighter and tighter. And when you break out of a wedge, it's either explosive to the upside or the downside. So as a technician, I look at kind of the shorter term price action to see what's going on. And as we know, we saw a dip recently on the robo-taxi unveiling, a little bit of disappointment, and it's trading in what we would refer to as a bear flag. Sideways chop, which is telling you buyers are meeting sellers and there's kind of a void of price action. That tells us the probability favors a downside move on earnings. And if you break that parallel, that upsloping trend line, you're likely going to see a move down towards 205 to 200.
Should TSLA go back below 200? Yeah, your boy would not be disappointed. With Tesla on the path to restoring their vehicle production numbers, on the doorstep of solving for generalized autonomy, yeah, I'll pick up some TSLA below 200. Please and thank you.
So what's interesting is that it seems if we break to the downside, then you open up that trap door in a pretty big way. But even if we stay within this pattern that you've got, there's some pretty big upside too, potentially, even just to stay in the pattern. So should we just be like trading vol on this, or is that risky with Tesla where there's pretty much high implied vol all the time?
Yeah, and I think that's the biggest risk here is that there's that high volatility potential. For instance, if let's just say they do surprise and the bear flag doesn't play out, the upside is to about 239, which would be basically the gap fill from when it dropped on that robo-taxi unveiling, really where this bear flag started. So it is a risky play here. There's no doubt about it. Probability slightly favors that downside move. Personally, am I going to jump in on this? I'm going to stay on the sidelines. I don't like that much risk. Like you're saying, it is very, very risky. But again, it would favor the downside based on pure probability.
It's been a long time since your boy has placed an option call, or a put for that matter. But as Bruce Arians would say, no risk it, no biscuit.
But I think what investors are asking themselves is whether or not earnings are really going to introduce or help reinvigorate some of that lost confidence that we've seen on the heels of the robo-taxi event. What do you think?
I think it's a tale of two Teslas. I think there's what Tesla is doing right now, which is its current automotive business, and then what it's going to do in the next year, next 2 years. You look at the robo-taxi event, and it was almost, it was very ambitious in terms of, the mission for a future Tesla, but it was also underwhelming with specifics. So I think investors are going to be very curious as to how Elon Musk manages to sort of marry those two concepts, as well as deliver what will likely be solid, if not spectacular, results.
It's interesting because we know that Elon Musk has said, don't own my stock if you don't believe in our full self-driving capabilities story moving forward. Greg, do you think that do you agree with that? That it's a stock to own only on the basis of its full self-driving technology?
I would disagree with that because I think the core electric vehicle business still is extremely lucrative for Tesla. It has the potential for ambitious growth. I think the disconnect actually is that what Elon Musk wants to do? Remember, it is his company. So that's where it gets kind of, I would say, a little weird because I think investors and car enthusiasts, electric vehicle enthusiasts, might be more interested in the products he's currently making and how he can iterate those. I think his take on things is that the future is going to be all AI and autonomous. I think he's actually going to be long-term less interested in making cars. Of course, Tesla's still going to do that, but I think he has different plans for the kind of company that he wants Tesla to be.
Look, Tesla is going to be the largest producer of battery electric vehicles. Why? It's gonna be because of the Cybercab. The goal with this unbox method is to reduce the cost by about 50% and increase the factory output double that of the Model Y. What does that even look like? Is it the Cybercab coming out of the factory 2 every minute? What I want to know is how much of the unbox method is being used on those Model 3 and Y lines, and is the team actively pursuing what they unveiled at the Master Plan Part 3 when it comes to the unbox method? Has there been significant modifications? Should we, as investors, lower our expectations on how much cost will be saved and how fast this process actually occurs? So many questions to be asked at the Q3 earnings, and more than likely most of those questions will be Have no fear. Tesla will be the largest producer of battery electric vehicles in a decade's time, but in addition to that, they will be able to make so much money off the heels of their robotaxi optimists. But before all of that, Tesla has to solve for generalized autonomy. This company doesn't become the most valuable company in a decade's time without that key element. So if you don't believe that Tesla will solve for generalized autonomy, you probably shouldn't be invested in this company. But because I'm using the software, our AI student driver FSD supervised 12.5.4.1 leaves me speechless and relaxed every time I have this thing engaged. You really have to experience it to believe it. In conclusion, people just aren't really buying cars. I mean, it's a huge expense. Given the macroeconomic times we're in, yeah, you gotta kind of expect that the auto industry is suffering. Add on to it the transition to battery electric vehicles. Some of these legacy OEMs, yeah, they're not going to be thrilled to have these earnings reports. Luckily, Tesla seems to be holding its own over there in China. Despite heavy incentives, if Tesla is able to maintain their margins, we could see a break to the upside going back to the times before the We Robot event. A miss of any kind could send the stock tumbling back down to below 200? Let's just say I'm giddy with anticipation. Regardless of what the stock does in the short term, long term, I have very little doubt that Tesla will become the most valuable company in a decade's time. So I aim to use all the fear and uncertainty to gobble up as many shares of TSLA as I possibly can at this extreme discount. That's all I've got for you today. Be easy. Peace.